from the 11FS. This is Fintech Insider News, live from the Village Underground here in London. My name is David Brear, CEO here at 11FS, and today we're going to be covering Nationwide agrees $2.9 billion acquisition of Virgin Money, JPMorgan want to launch biometric checkouts, and people are losing up to $50 billion in lost pension pots, according to new research. Discuss all of this, I'm joined by a group of fantastic guests. First up, we have my colleague and co-host for the evening, Jamie Campbell, who is head of VC at 11FS. Welcome to the show.
Hello. The restraining order means I can't go past this line.
Yeah, it's like an invisible barrier. How's it going, Joe? You good?
I'm very good. It's quite weird. This is the first time I've been on a Fintech Insider anything, being an employee at 11FS.
Yeah. Does it feel like more pressure? Is it like there'll be a HR moment tomorrow type thing? Or
Well, I feel like there's the ceremonial removing of the hat, which says I don't work here.
Is that thing? Is that, well, I don't know. You've had that on all day. The hat hair underneath it wouldn't be advisable, would it? But
I don't know. If people cut, is that bad? No? Okay, it goes off. There. Ooh.
Ceremony and everything. How's it going? Busy week. Did anybody see the slightly weird promo video of this that me and Jamie did for tonight? We did a walking down Brick Lane, chatting, buying a bagel. It was quite a weird experience, wasn't it?
It was quite strange, but I got a free bagel out of it. I got 2 free bagels out of it, so I was pretty happy.
That's true. Yeah. You'll do anything for bagels. All right, we better move on and we can talk more later about the bagels. Next up, we have Georgie Frost, financial broadcaster and journalist. Welcome to the stage. Hello, Georgie. How you doing? I was saying earlier on, I basically sort of see you on the tilly. Like all the time.
On telly?
Yeah, pretty much every time I turn the TV on. No, it's very informative. It's where I get most of my information about financial services, actually. But
God,
how you doing?
Yeah, probably better than you if you're listening to me for all your financial services information. Yeah, great. Glad to be here. Thank you very much for inviting me.
All right, and we also completing the lineup. We have Alex Rivas-Gale, who is head of product Europe at ClearBank. Welcome to the show.
Hello.
How's it going, Alex? How you doing?
We're all right. This is kind of the first time I've ever done anything like this, so really a debut. So hi to the friendly faces in the audience that I cannot see, but very excited that they're here.
Yeah, bright lights. You can't see them at the back. And to be fair, it's they're judgy faces. You can't see it.
Yeah, thank God I can't see them.
But right, we better go on because there's a bunch of news and a bunch of things that we want to talk through. This was a story that we first picked up over on City AM, but is being covered in much less reputable outlets, as we discovered backstage as well. This was Nationwide agrees $2.9 billion takeover of Virgin Money. So the board of Virgin Money have agreed a $2.9 billion acquisition for Nationwide, the largest building society in the world. The combined group will have 700 branches and assets of approximately $366 billion. Nationwide, if anybody doesn't know who's listening to this abroad, is a membership organization. Last year garnered praise for distributing $340 million. $340 million sounds like a lot, but when you've got 3.4 million customers, everybody got 100 quid. So it's like winning the lottery and everybody else winning the lottery, isn't it?
That's about 17 million customers, but 3.9 or something. Committed members, it's called. That's why.
You've got to really commit to be a member.
Yeah. Is it another hat ceremony? Or, however, the deal has been criticised, apparently, for members not being given a fair say over the Virgin acquisition. I mean, maybe, Jamie, if we start with you on, what do you think is this a good investment?
It's a very good deal if you're Richard Branson. I mean,
I checked. I'm not lately.
Yeah. Okay. Yeah. Well, I mean, Nationwide clearly think it's a great deal. I mean, they are paying a 38% premium on the share price, so they clearly want to get this done. But it's pretty unprecedented, knowing that this will create the second largest financial services group in the UK, and it won't be a bank per se, although there is complications which we'll get into. And Nationwide as a brand has this kind of like warm, fuzzy glow around it, which other very large banks don't really have. So I think it's an interesting move in that direction. But in terms of, is it a good deal? Is it a good investment? Well, the amount that they paid for it, if you look at other acquisitions that have happened this year from medium-sized banks by larger banks, the Tesco Bank takeover by HSBC for $1 billion would make it seem like it's not a very good deal. But if you include that in 2019, under the mortgage book was bought off of Tesco Bank for $3.8 billion, then actually starts to seem like a pretty interesting and good deal.
Why does it feel weird that a building society is buying a bank? That's the bit that I sort of find weirdest about this. Does anybody else? No?
Because it's not as usual, is it?
Yeah.
We saw a load of the other way, but we haven't seen so many this way. It's a big risk, I think, for Nationwide. Like you said, it's warm, it's fuzzy, it does all the right things, it ticks the right boxes, the customers really like it. My concern as a personal finance journalist and consumer journalist is the customers and how they feel about it. But in terms of the reputation of Nationwide, to choose a bank which, look, is not doing, hasn't done amazingly well for a while, I just think it's the deal that I don't know who was actually asking for, really. And to not go to your members, committed or just customers or whatever, is, what is the point of you as a mutual if you aren't going to go to your customers? Their argument, presumably, was, look, we had to get this deal done really quickly, and if we'd have gone to our 3 million odd members, committed members, it would have taken too long, someone else would have come in with an offer, etc., etc. If you are too big now to do what you say you do as a mutual, what are you going to be like in 6 years' time when you've migrated, if they are going to migrate these customers across? I don't know what's going to happen. In terms of what's going to happen to customers, anyone who's a Virgin Money customer at the moment, I would say, look, this is going to be a slow burn. It still needs, shareholders for Virgin get a say in this. So that's another smack in the face, isn't it? Richard's a fan. He likes this move, obviously.
He loves this deal.
He's already given the okay to it. But yeah, I wouldn't worry in the medium term. Same as the staff, apparently. I think it's 7,300 staff of Virgin Money. Apparently, don't worry about it this year. Next year, well, tough luck. So yeah, I think that in the short term, for anyone who's got a mortgage or any sort of banking service with Virgin Money, this is going to be a slow burn. They're looking at around about 6 years. What happens beyond then? Who knows? But in terms of things like mortgage rates, savings rates, we know, looking at the big high street banks, let's be honest, they don't offer the best rates. So I cannot imagine that this is going to be good for the consumer. I don't know who this is going to be good for, except, like you said, Richard Branson, some shareholders, and is it Denise Crosby?
Yeah.
Obviously, it looks quite good. She's doing a good job.
Yeah, Debbie, yeah. They're making hay. They're moving forward. Is it fundamentally a flawed model of, going and asking people their opinion? I know that sounds like I'm advocating for some sort of dictatorship, but we've done
Democracy,
it a lot lately.
I think it's called.
Brexit happened, and we vote every so often on who the political party should be. It doesn't seem to go so well, does it? So is it a good idea to ask the general public how you should run your business? Who'd like that one?
That's amazing. I'm pretty sure we could all think of examples the other way which don't work. But look, that is the model of the business.
Sure.
Labour are obviously big fans of it. They want to double the number of building societies and mutuals. So the model of the business is that the money comes in and it's invested back in the customer, providing better services. This is $3 billion of their customers' money going to something that the customers have no say over. Look, according to the 1986 Building Society Act, whatever, they don't have to do it. Okay, fair. But then I go back to the point of, what is your purpose? Don't pretend to be something. And let's be honest, Nationwide already, I think, was peeing a few of its sort of customers off, getting too big. And I just really don't see what the benefit of this is going to be for Nationwide. But look, it'll all come out in the wash. Let's see.
Yeah. What do you reckon, Alex?
You look at it, though, and look at Nationwide. They're going to become the second biggest mortgage provider in the UK overnight. What does that mean for the end customer? What's the customer experience? What is going to happen in those sort of 6 years that the takeover is going to happen? Maybe it's a slow burn, but there's going to have to be really quick decisions on what tech do we do? How do we operate? What is the end customer experience? How do we potentially consolidate and have a proper operating model? There's some really big things that will have to be decided, and doing that too slow is going to be at a consequence. Doing that too fast could have a knee-jerk reaction and things could fall over. So it's a very uncharted territory of what does it mean to be a building society and a bank. And then you layer on top what it means to have a banking license, and that comes with a whole raft of complexities of regulator, capital requirements, reporting, all of these things that hasn't necessarily been the fiber of what Nationwide have had to do. So uncharted territory, and the biggest question I have is, what does this mean for the end consumer? How does that impact them?
And the smushing together of like members and customers, and like what do Virgin Money customers, I guess, become members, or how does that?
They've not guaranteed.
How does that all work?
Yeah, if you look at the comments in their press releases and stuff, they said there's no guarantee that that's what's going to happen. So what is going to happen? Are they going to keep a separate section for them? I mean, you spoke of there. To have a banking license, it's a major distraction, if nothing else. Like, what resources are going to be pulled into just dealing with the added admin of all of this? I don't know.
Yeah, I mean, ownership structure and how that rolls up to the parent being able to, or having to adhere to all of that regulation. I mean, it is quite an undertaking. But they haven't just been like, it's not like me on Amazon at 10 p.m. and I'm like, yeah, fuck it, I'll buy that thing. They've clearly considered it, haven't they, through that process? So, I
mean, they're saying, look, it's the business lending that they're really interested in. I've also looked, and they said it's about credit cards. Nobody tell me the credit cards are good for consumers. But, they tried looking at business lending before, and it kind of fell by the wayside at the pandemic. They had the knowledge and the infrastructure in place already if they wanted to do that themselves.
Yeah. I mean, can you think of any, and this is a weird one to put everybody on the spot for, so brace yourself on this one, but it's like, I can't really think of any big mergers from like organizations that at the end of it you've gone, yeah, like the ROI was there, this worked out. Like, can you think of any? Can anybody in the audience think of any?
The research is in your favor, that it doesn't show that there are that many.
Yeah, which is not boding well for the outcome of this one potentially, is it? So.
And that goes, will people vote with their feet? Will they leave? Will they go somewhere else? And then that is a big piece around, well, what happens to the fate of these financial institutions?
Yeah.
So that's a really interesting thing of saying, like, does that cause hysteria and people start to exit because they're angry at Nationwide or they're uncertain at Virgin Money? So what does that mean for the end consumer at the end of the day? What are they thinking?
Yeah, I guess, what are you thinking? Like,
what are you thinking?
I guess we all skew quite fintech in this crowd, but like, put your hands up if you bank with Nationwide. Okay, cool. Put your hands up if you bank with Virgin. Okay, all right. So you guys should get together. Like, I think that's
have a chat about it.
Concluding, yeah. Grab a bagel, enjoy yourself, right? All right, we better move on because there's a lot more other stories. But yeah, like, building society buys a bank. That doesn't happen all the time, does it? All right, next story that we had was one that was picked up on a bunch of other places, but Payments Dive apparently was where we picked this one up on. It is JPMorgan to launch biometric checkouts in 2025. So JPMorgan Chase is planning to roll out a new biometric checkout service with its merchant customers as early as next year. The new service can be used either in e-commerce or at physical checkouts. Consumers are required to complete an enrollment form with the bank where they upload a selfie and enter a payment card information. Then when paying at a merchant using JPMorgan's service, they can opt to check out using their biometric information. Biometric information is quite vague, isn't it? It could be a number of, I guess, because it's a selfie, it's a picture of some description, isn't it? I always worry that I will never be able to replicate my selfie face, don't you? Like, so that might be a problem, but maybe also a good thing.
It doesn't work like your passport. It's much more sophisticated than that.
Okay, we'll come to that. So their payments unit has already piloted the service with food service providers in Texas, apparently, and plans to engage much more merchant in the pilot this year. The bank has a huge pool of merchants who could adopt the service. In 2022 alone, they processed 35.83 billion transactions. Yeah, they probably know what they're doing, don't they? And that was worth $2 trillion, apparently. Okay, so what do you reckon on this one then? Rather than come to you guys on this one, what do you think? Would you use a selfie checkouts? I mean, it seems like a good, again, especially if you're at that McDonald's late night and you've got that vibe and, you know, I can't remember my PIN, but I can remember my face. Like, that would be... But a show of hands here, then. Put your hands up if you would use this. Okay, a lot of people. Put your hands up if this terrifies you. What is it about it that terrifies you, madam?
Just having my personal data out there. I just want to limit the institutions being able to have my data.
Okay, so having your data out there, essentially. So, and it's an interesting point, isn't it? At what point convenience, like, how could we convince that lady to give up all of her data? Is it like free Wi-Fi at the venue? Is it like, you know, what do you think on this, Georgie? Is this sort of an advancement from a technology perspective, or would I feel like I need to do my makeup the same way every day in order to...
images of you with your banking app, just doing that.
Yeah, pretty much.
Like trying to get a selfie out of it.
Yeah.
I think the lady there is echoing what many people feel, or not actually many people, not enough people feel. Your biometric data is the most important, and I'm going to sound like a cynical old cow now, but is the most valuable thing you have. You lose your card, your PIN, to a certain degree, your social security number, right? These things can be replaced. If someone hacks into the central database where your fingerprints, your palm, vein information is, you're screwed.
It's hard to get new veins, yeah.
Do you know what I mean? Like, but don't get me wrong, we are already using it. This biometric stuff is already there. You're using your thumbprint. What it will take is just, you know, it's a bit like when we used contactless and the tube went with it, and then after that, we were all tapping and going, weren't we? I think it's just about general use. Do it when we open our phones. We'll get there. I don't think it will take much, and then offer a 5% discount for something and free Wi-Fi. We sign up everything, don't we, for that?
I mean, that's the thing. I'm pretty sure I've given away every data point. Like, I'd give one of my kids if I could get proper Wi-Fi. You know what I mean? Like, so like, do you know, like, is it just reducing the barrier? Reducing the friction to a level where people are like, yeah.
I really like the idea of people kind of lining up at a checkout and getting like eye level with a POS machine, like. Does that work? Did it work? No? Right, do it again, you know?
Yeah.
Like, I just feel it's one of those things that's just like, I would love to see this in action so that I can have like a strong opinion on whether or not I would do it. If it was like nice and...
Well, you kind of see it in action. Go to Heathrow Airport and go and try to get your passport to check out, and then you always get the seek assistance and then have to go to the really long queue.
Yeah.
It happens. And
but those things are massive mechanical Turks, though, aren't they? Because there's just a bunch of blokes in the background looking at your photo anyway, aren't they? So it's not... No, it really is. It's not automated at all. It's just it's just they can do it easier if they flash it up, you know?
Yeah. But I think we also have to think about, we're trying to combat fraud. Great. One way to do it is your face or your fingerprint or your palm. But then the other piece is that at what expense? Your privacy. So then I think it goes into this really dangerous territory of like, how much information are we willing to give? Where do we then keep our own privacy in this whole piece? And so it's this very kind of we're in the cusp of giving away absolutely every piece of information about ourselves. And the pendulum's obviously going that way, and we're going that, and it combats fraud. Great. But then, obviously, the banks who are doing it have to have the right infrastructure. Do they have the right security measures in place? Do they know how to store this data? What do they do with it? So there's a lot of big questions on, JPMorgan, of course, naturally, massive company, will do great, we'll be fine. But maybe some other players in the market may not have that same infrastructure to support it.
Yeah, it does feel like, I mean, I know, again, I feel like every 3 or 4 episodes I talk about Dave Birch for some reason, but he seems to appreciate it. But he's been banging on about identity for like a decade now. People should probably listen to him at some point. But, the idea that there isn't any proper central identity capability. But again, back to the story last, we asked the UK population if they wanted that. They sort of freaked out, didn't they? There was pitchforks and fires and all sorts of stuff. So, but it seems like such a critical infrastructure piece, doesn't it? Like if we had a good identity scheme, so many things would be so much easier, wouldn't they?
Yeah, well, I mean, a lot of the digital transformation that's happened in India, for instance, is built on a digital ID system, and it's kind of unlocked a whole load of amazing capabilities. So it's not like it's not useful. But culturally, it's hard to get people. We've heard it here. We were talking backstage, and we all kind of agree that it's a cultural thing where you don't want to, you either don't want to centralize your identity information, or you don't want to put lots of your ID, your biometric information in lots of different places. There's both of those scenarios feel wrong for some reason culturally with what we're doing now.
Is it an exchange of value thing? Because actually, everybody freaks out about Facebook and Google knowing everything about them and blah 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 blah. But pay me for my data, goddammit. Like, is that the point?
Yeah, I don't think the payoff is enough, because it's like the chip and pin to contactless. It made you realize just how much effort it was to put your PIN in, and so no one, and then the Apple Pay. I don't need to bring my wallet out, so I can just kind of stroll out of my house and not really care about it. I'm not entirely sure this gives us an actual step up in experience enough for people to actually want to take that additional gambit and bet into this experience.
I would say the people that most benefit, actually, ironically, are the people who are least likely to use it. People who are perhaps older, that will forget their PIN, forget their card. This is actually quite useful. I mean, and in terms of getting, and the other thing that we haven't really discussed yet is just what's the cost going to be on merchants for this? Unless you all go in one movement, like we all have facial recognition or we all have palm identity, will they have the surface counter space? Will they have the technology space? I mean, which one are they going to bring? Who's going to use what? I mean, I went to Co-op the other day. They've got video cameras now, screens in front of it. It wouldn't take much just to switch that and identify our face. But then you could go down a whole dystopian thing. That, you go to a pub, you buy a drink. Sorry, you've had too much. I can sell it in your eyes. Like, okay. Or we don't like your service here. You don't have enough money. You're not coming in. I'm in.
All of these
but
stories.
I think it's inevitable, to be fair. We're all going to go that way.
Yeah, I think every story tonight basically takes us down some sort of Black Mirror episode, doesn't it? Which is quite scary.
Charlie Brooker is here.
I mean, is it a good enough experience improvement, as you say, like going from contactless, going to using everything with my phone to actually my face is everything. Like, I mean, and actually, I mean, as the celebrity on stage, then actually your face is out there on TV all the time. So like cloning your face, not actually your face, but like that's got to be a risk, isn't it?
Well, I certainly think that with voices.
Yeah.
I mean, I'm stuffed because my voice is everywhere.
You're one synthesizer away from being redundant at that point, aren't
Oh
you?
my God, yeah, absolutely. So yeah, there's obviously concerns about that.
I feel like I've just really scared Georgie on stage at that point.
I'm going to speak like this from now on. It's absolutely a concern. But like I said, I think it's inevitable. It's just how secure it's going to be backed up. And I don't know, look, will it bring added benefit? Yeah, I really do think so. As someone who's still stuck in the dark ages and I actually use my card, like tapping stuff, not my phone. I only discovered that like a couple of months ago, revolutionising me life. But I don't like carrying my phone around and paying for something, especially if I'm on my own in the tube or whatever. Actually, the idea of sort of swiping and going has an appeal to me that's beyond actually the convenience of it. Because, like you say, oh my God, have you ever tried to get your face in one of those things for like a photo and it's like, oh, take it again, can't see your face. So actually, like, I don't foresee it necessarily being like that, but there's a security element that we haven't discussed there.
Yeah, well, it's a weird thing that we're essentially trying to replace, a £5 note or a £10 note, essentially with a $2,000 piece of glass that you carry around with you all the time. Like it's especially walking around Shoreditch. Like I wouldn't advise just walking around with your phone out. You know what I mean? So it's what do you think? I mean, is it going to catch on?
I think so, if the user experience is there. So imagine you're trying to check out an e-commerce website and then all of a sudden the face recognition stops working. Like, you would just get over it and be like, right, not going to do that. So are you going to have a massive amount of basket, like people just leaving stuff in their basket and not shopping? Are you going to see a decline in revenue? Because quite frankly, it's a pain in the ass. They're like, we don't want to deal with this. And they move on, they go to another website and they buy whatever they want to buy, particularly in an e-commerce space. Or you're in the shop and all of a sudden it goes down and that's your only mechanism. Well, what do?
Yeah.
And they don't take cash anymore. So you're kind of just like, well, shop's closed. So I think obviously this is going to be the future. It's not going away. But I think the biggest thing is what happens if it stops working? What's the user experience? Your point, sitting there fiddling around, fitting your face into a circle. for 10 minutes, you're not going to want to buy that thing in your basket anymore. You're so annoyed it's gone.
We actually, bizarrely, we actually did a lot of user testing for this one. So like, a couple of years ago in Helsinki, we did a Fintech Insider Live, and it was how we allowed people to pay for the bar. And I was like, I'm gonna test the hell out of this. So like, just for like, testing, I got progressively drunker in order to see whether the face at the end of it was actually being picked up or not. And it worked all the way through. So, either success or failure. I'm not sure which one of those it should have been, but right, we better move on though, and we've run out of time on the first half of the show. So coming up on Fintech Insider News, we're discussing missing pensions and Australia's youngest homeowner on the second part of the show. Welcome back to Fintech Insider News, where we are recording live from the Village Underground in London. Audience, make some noise. Yeah, that never gets old. Like, it's always fun. I feel like just throwing it into the middle of sentences just to see if you're paying attention at this stage. But anyway, the next story that we had was one that was covered in a bunch of places, but iNews picked this up. Pensions worth over 50 billion at risk of being lost as people lose track of pots. Real big shout out to David Henderson at Penny for suggesting this one over on LinkedIn. New research conducted by the Centre of Economics and Business Research on behalf of PensionBee shows that over £50 billion are being lost as pots are being scattered across various different places that people have worked. Additionally, it's estimated that up to 4.8 million pension pots in the UK are now missing, which seems a bit careless, doesn't it? The number of pension pots has risen since the launch of the auto-enrolment in 2012, where UK employers are required to enrol employees into pension schemes. The research also suggested that the total number of UK pension pots is expected to rocket by 130%, up by to 2050, which is going from 106 million to 243 million. Georgie, I'm going to come to you as probably the most sensible one out of the four of us.
Obviously.
50 billion is a big number, isn't it?
It's an enormous number.
Is someone to blame? Like, are we incited?
Yeah, it's
is
our
somebody
fault.
to blame for this?
We're lazy. No, I mean, look, it's weird to say, but part of this is a good news story. This is a projection about what it's going to be like in 2050, because we're already losing a lot of money, or we've lost lots of pots already. The 4.8 million, I think, is over £10,000. 4.8 million pots, over £10,000, have been misplaced. I mean, they're still there for you. They don't go anywhere. It's just the fact that the good news story I mentioned was auto-enrolment, which, yes, you can argue it's not going to be enough, the amount we're saving in, but it's a start, because let's be honest, what we know is not enough is the state pension. So it's good that people are being enrolled into automatic enrolled pensions from their workplace, but it does mean that with the average number of jobs that we will have during our lifetime, which currently about 11, but I imagine in future years it'll probably be more than that, there are going to be a lot of pots that go missing. We move, we rent, we change house, we lose details, etc. And what do we not like to do? Any kind of personal finance admin. Oh my God. So, not to be dull and boring here, it was actually one of my first tasks of lockdown. Woohoo! I actually used PensionBee. There are other consolidations. You can actually go to your current provider if you want to. It doesn't have to be PensionBee. I just decided I would because I know them and I like the group. And consolidated all my pensions. I had about 5 of them. Now, I really like it. I like the app. I like the way it works. It's a bit more expensive, but this is not a review of PensionBee. But the research is by PensionBee. So it would explain why a kind of company that offers pensions and consolidates is talking about this and making it a big deal. But it is a big deal. And actually, it's about engagement. And it's one thing that we all need to do is engage with our pensions. And before you go... it's a ticking time bomb. I hate to say it, and honestly, every time we talk about pensions as a personal finance journalist, I am the biggest bore in the room, right? Oh my God, it's her again with her gloom and doom. But, look, you do need to take action. And these pots, like I said, they just sit around, and who gets it at the end of the day? Well, if you don't claim it, the government will probably get it. No offense, I'd rather I get it, or at least my family if I die. And it's actually quite easy to do. There's a free pension tracing service. You need a national insurance number, your old workplace, or the pension provider, but you're more likely to probably know where you worked, and hopefully they can find it for you, and then it's up to you what you want to do with it then. But look, that's the personal finance.
The language you used, hopefully they can find it for you. I think that's the thing that's like always so kind of disheartening about this. It's like...
I'm FCA regulated, which means that everything I have to say means hopefully, likely, could be. So look, yes, they should be able to find it for you, but I can't guarantee in every single
just
case
like
that will be...
Just like my missing pension pot that we were talking
what
about
I
in the
mean?
green
Yeah,
room.
there are, exactly.
Well, it creates the image of somebody sort of going down the back of a sofa trying to find that quid they lost. Do you know what I mean? But is this just sort of silly, wasteful people that don't know anything about financial services, or might there be somebody on our panel with a nice jacket on that might be in exactly this particular situation?
It could also be me as well. So I think he's talking about you, but it could also be me.
I just think the big thing we look at is that most of it's paper-based still. So you get auto-enrolled, you get a massive packet in the mail, comes to your house, you're like, great, I have a pension. You put that in a drawer, maybe you move flat, you go somewhere else, you've lost that packet, and the next thing you know, wait, oh sugar, I don't know what happened to that pension pot. And personal anecdote, that happened to me. And I'm still hunting down this missing pension pot from my first job when I moved here in the UK in 2014. So someone in financial services thinking about, well, this seems a little bit crazy that it's very paper-based. Consolidation has to happen, so there's some really great providers to help you consolidate. But some people, what do you do when it goes missing? And who do you call if one pension sells to another pension and it goes into this kind of black hole? So I think the big thing is how do we lean into making this smarter, more like having better technology, having it all digitized, stop sending leaflets in the mail, because I don't think that necessarily helps, and kind of look at the future of this.
So it sounds like I'm the one who's going to have to say pension dashboard, which I really didn't want to be the person to say it.
You said it.
But because Georgie didn't say it, I think maybe I should...
I left you some space.
Yes, it's a safe space. But it's like, this is the thing that they want to avoid by creating a pensions dashboard. The problem is that we've been talking about this thing for ages. And, when I was working at Bud, we were, doing a lot of open banking based stuff, and, we heard the murmurings of pension dashboard, and we thought, oh, that could be an interesting thing to get involved in. And so we ended up in some of these, very weird committee rooms with, representatives from pension providers, and you're sat there and you just think this is different to bank. This is different to banking. This is a different behavior to banks being around an open banking, a PSD2, committee, and they're all a bit upset, but okay, we'll do it because we're being told to. They're not going to do this. It's just never going to happen. Unless there's, a very strong legal reason that makes them do it, they're just never going to play ball. It's just never really going to happen.
But why is that, though? So, because, I sort of joked before about, is it like, when Pizza Express sells a voucher, they're like, I hope you never use this voucher, enjoy, do pension providers presume a large part of people are never going to use those pensions, therefore the economics of that is right? Or is there an evil overlord hoarding all of this money?
I don't know, but I think that it's probably down to incredibly antiquated businesses, where there's incredibly complex sell-on activity that happens without you knowing. Someone will just sell your pension to another person, and it happens in the background, which is why, Georgie mentioned this tool backstage, which I didn't even heard of. This pension tracing tool. I'd not even heard of it.
It's a government service.
Yeah, well, and exactly. But
anyway.
It's like, I don't even know about it. But I think when you were saying, hopefully they can locate it, it sounds like sometimes they can't locate it because of this continuing
You didn't have a national insurance number. You have to say that, because having a national insurance number is pretty fundamental if they're going to help you find it.
That old
Otherwise, you'll go,
chestnut.
hey, I've got a
Was that the
pension.
reason?
Yeah.
We found it.
Well, I would
We
just say
found it.
very quickly, because I mentioned about consolidation, and I have to do the personal finance thing. It's not right for everybody. Double check, do your figures, etc., etc.
Yeah,
It
none
may
of this
lower
is
your fees,
advice.
but it may
Yeah.
increase them. And I'm not here to give you financial advice. I'm not qualified, etc., etc. Anything here in this podcast? Thank you.
Yeah, we do have to put those disclaimers out every so often, but I'm like, see what happens. You never know.
Sue us.
Yeah, it's fine. Come get me. It's all good. I mean, is there more of a responsibility on those organisations to make this easier as well? So, you know, your point on, I mean, pensions is an interesting one, but I've sat in like the Payments Council where nobody wanted to do anything as well. You know, so is it just somebody needs to make them do this? And I go back to that. Is there an evil overlord just basically taking all of this money like the government? So are the government not incentivised enough to make people do something about this?
This does not benefit the government for people to have a poorer retirement at all. So you know, and I don't think they're really thinking that far ahead. They're probably just thinking to the next election. Can something be done? Absolutely. But all these ideas will take time, take commitment, take money, take admin work, etc., etc. There's been a lot of talk about a pot for life. Jeremy Hunt's a big fan of that. But then you have issues with, are you going to have a less competition in the market, etc., etc.? Is this going to be worse for consumers? Are those people with poorer pensions going to be stuck with the rubbish ones, etc., etc., etc.? It's a headache. No one wants to touch it, and you could probably use that argument for pretty much every area of our lives at the minute when it comes to politics and money.
And where do you start? So I think that's a big thing. The investment is massive to be able to solve this. So someone just can't wave a magic wand and it's all sorted. It's extraordinarily antiquated, it's paper-based, there's lots of old systems that are going beyond this, and it's complicated as things get sold on and it changes. And so, you know, there's gonna have to be an evolution of how will this actually move forward. I mean, we see other industries in the financial services doing great, you know, crypto and all of these really cool things, but we forgot about pensions. They're kind of just like still at the starting line in the back. And so we have to look at the financial services industry to all lean into this together. It won't be sort of the one person coming in and solving it.
What I would just say really quickly, if you are an employer, do better. No, really, like, tell your staff about pensions, educate them about it, give them like a pack when they arrive, and when they leave, tell them all the options that they can do. You know, you can take your pot with you, potentially, in your new place, etc. Educate your staff, because ultimately we can tell government to do it, we can tell business to do it, we're going to be waiting a bloody long time, and it is our futures that matter, a poorer future. So as I said, if you're an employer, please, it doesn't take much, educate your staff on this one.
Well, I feel like I've got a meeting to put in tomorrow morning at 11:00.
I was looking at you there, David.
Yeah, I feel seen, my bad. I'll put that meeting in. Right, we better move on. So I think we've had our say on that one. It sucks. You need to fund your pension.
One day.
I need to do better with my life, which is good. All right, it is now time, though, for the and finally, where we take a bit of a look at something a little bit more offbeat. First off, we're going to do a little bit of a show of hands again, because we do like a little bit of participation. How many of you are homeowners? Put your hand up if you own your own home. I feel like this is like stealing your data at this stage. It's like, and what was your pet called? No, I'm joking. So keep your hands up. Put your hands up again. I didn't say put them down. Keep your hands up if you bought your first home under the age of 40. Okay? Under the age of 30. Are you lying about your age? Under the age of 25. Do you have rich parents? No. How about under the age of 10? You laugh, but that's the context of this story. So this was picked up, I don't know if you guys read this in Metro. An 8-year-old has become Australia's youngest homeowner after investing her pocket money in property. Fuck that kid, right?
Cue the Simpsons meme where all the kids are looking back over their chairs for Bart to say the thing.
Yeah. So 3 years ago, 8-year-old Ruby, and I feel bad now saying that if they somehow listen to this, like Daddy, I'm on a podcast. Oh dear. Anyway, and her two older siblings lumped together 6,000 ASD from pocket money. Who the fuck has $6,000 pocket money to purchase a 4-bedroom home? I mean, that was the deposit, right? A 4-bedroom home in Australia.
No, their parents added. I'm sorry, I'm the cynical journalist on this one, right? Their parents added to the deposit £2,000 each for 3 kids. Yeah, pocket money, Christmas money, you know, etc. Really? Oh, and he happens to be the dad happens to be a property investor with a book. Oh, wow. Now
Cue
the
the-
story, the penny drops, the kids turn around and go, please. It's exploitation.
Yeah.
And money it's child exploitation. And money should be there to be enjoyed to a degree. It's nothing to be proud of. It's nothing, get to my age. I won't say my older age, the other side of 30. Then you can buy your first home and, enjoy life. Money's there to be enjoyed. I've thought too much about this story, clearly. But, I do think there's a lesson in this that is nothing to be proud of, that you've saved all of your pocket money at the age of 6 or 5, and you haven't, please, what sort of parents are that? Nah.
I just love that you're so pissed off about this.
Oh,
one.
listen,
Like,
it's got me
it's like-
angry, right? This is not the funny end
This
finally,
was the
right?
funny end story of the
The
night.
hill I'm going to die on, man. Like, oh my God.
What I find weird about this is if I gave my daughter $6,000, she would buy a house with it. Like I said backstage, she'd buy a lot of Tic Tacs, that's what it'd be, and like some Squishmallows or something silly, you know what I mean? But yeah, do you?
Good for her. You're a good parent. Good parenting.
Well, either good or bad, like really bad. It's somewhere in the middle, isn't it?
If you think you're bad for not giving your 8-year-old daughter a house, then...
Yeah, I couldn't quite work out if a 4-bedroom house in Australia costs £6,000
It's now worth about 950,000, so they've done all right.
Yeah,
it?
there's a lot of questions to unpick here. But the thing when I read this is like, what happens? You go to rent that property, and you show up and your landlord's 8 years old, and you're like, all right, hey, how's it going? Like, how do you negotiate that rent?
Yeah, how do you deal with that as a 35-year-old renting a place? And
It must make you feel really good, I reckon. Yeah.
My landlord is 8 years old, Mark. Oh, God.
I feel like they'd have really...
Can you fix the toilet? I don't even know what I can't even add up.
Yeah, exactly. You mean potty, right?
Yeah, I still do it sometimes in the bed.
I mean, when you were that age, so when you were 10, pocket money, what were you spending on?
When I was 8 years old.
Yeah.
At the end of the road where my school was a corner shop, and they had the most amazing like pick and mix, like penny sweet bags where you could buy like a 20p like pre-mixed bag. Just used to do that all the time. Like
Oh, yeah.
always.
New Kids on the Block CDs.
Nice.
Or what were they like?
Nice.
Yeah,
That is a good one. Throwback, right?
I have no idea if this is going to translate, but in America we had Pogs. If anyone remembers back in the day, these little lights are, some Pogs.
Wow.
They were these
What is
weird
that?
little discs, and then you would get something called a slammer that was metal, and you would just hit the little circles with the metal discs.
How tragic the 90s were.
It was like posters from Athena.
The Pogs were awesome.
I don't know about tragic. Like I was like super into New Kids on the Block, and there was a round of applause for Pogs. Like we need more Pog stories next time, So
Next headline, Pogs.
On this story, I'm actually really looking forward to when like Revolut in their teen offering offers like the mortgage product. It's like we could really get on this. As if this is the new market. They
Yeah.
seem to be plumbing so much stuff into their apps now.
Go
now
Henry
it's mortgages
starts
for
doing
kids.
pension advice to 8-year-olds. To be fair, though,
You can have
actually,
a pension at 8, you can't own a property in this country unless you do it by some sort of, ownership of a company, shareholders, etc. But, you can't directly own a property. It has to be held in trust or something under 18. Sorry, the boring person comes on and says that I've ruined it now. But you can have a pension, so there you go.
Well, I like the idea that this was like an argument over breakfast that got out of hand. It was like, if you think you're old enough, go live in your own house. And then he ended up investing in the house and giving them, and then all the children live there, But yeah, that might be the fantasy of the Brear household over breakfast that I'm thinking about. But
Yeah, do you reckon the parents are just sat at the dinner table like, I miss them.
yeah, I miss
Are they,
Ruby.
and also, do they know how to cook? Because they're not here, and
Or
they're
fix a
definitely
toilet.
Yeah.
Well, that's the thing. It just all feels like a threat that got out of hand, doesn't it? But anyway, on that note, they better conclude the show tonight. That does conclude this live episode of Fintech Insider News. For everybody who's listening to this, where can people learn a little bit more about all the good stuff you do? Georgie, where can people learn more?
Online? I don't know. I don't know what the names of my things are. I should have looked and researched it, but I was too busy, obviously, looking at 8-year-old kids buying properties. Google, LinkedIn, I don't know.
We've all got weird search history at this stage, haven't we? But turn the TV on, she's on there. Alex, where can people learn more?
LinkedIn, also LinkedIn about ClearBank as well. So basically, LinkedIn for me,
Very
LinkedIn
good.
for ClearBank, and website.
Very good. Jamie, where can people learn a little bit more about you?
Well, you can go on LinkedIn like everyone else. But also, if you are an early stage fintech business, this is the plug.
Oh.
If you're an early stage fintech business, you can now send a pitch deck to 11FS. You just go to 11fs.com/VC, and you will be able to get in touch with me directly through there.
Very, very good. As for me, I'm always pretty much lurking on LinkedIn these days, so you can find me over there. Or, to be honest with you, if you're in the room, you can find me over at the bar very shortly as well. And finally, thank you for everybody listening. We really could not make the show without you guys. And remember, if you want to join the conversation, God, I nearly run out of there then. You can find us on pretty much every social media channel or email us on podcasts@11fs.com. Thank you very much for listening, everybody. Goodbye.